Hi, IBD. I'm Meredith Heyman. This is Industry Insights. Thanks so much for joining me. On January 3rd, U.S. military forces captured Venezuelan President Nicolás Maduro and his wife. They now face criminal charges in New York City. But what is the market facing following this major geopolitical event? And what are the implications for the energy sector? Joining me to discuss what investors need to know is Tortoise Capital Managing Director and Senior Portfolio Manager Rob Thummel. Rob, thanks so much for joining me.
Thanks for having me, Meredith.
All right, Rob. Well, Venezuela has the world's largest oil reserves, but it actually only produces about 1% of the world's oil. With Maduro out, how does this stand to change?
Yeah, that's a good question. So yes, it's a massive country with a massive amount of oil resource, but it's going to take a massive amount of investment. So the way we look at it at Tortoise, we don't see a lot of companies like Exxon and Chevron coming in right away, because what Exxon and Chevron are going to need is political stability and political clarity before they invest the billions and billions of dollars that's going to be necessary for Venezuela to increase its oil and gas production longer term.
So you talk about stability. How will possible new infrastructure, open trade, and supply alter all of this?
Yeah, so it's
Possibly
really
a key word, though, right?
Yeah, no, you're right. It's really important to look at what happens to the infrastructure. I guess the good news is oil prices are pretty low. Or gasoline prices are pretty low right now. Frankly, Maduro's capture doesn't really change any of that right now. The oil market is oversupplied. We don't need more oil right now from Venezuela today. Now, maybe in the future we will. So the physical dynamics have not really changed in the oil market. So we continue to expect that oil prices will remain low. Now, you mentioned infrastructure. That's important. If the Venezuelan oil infrastructure was impacted in some way, then that would mean you take 1 million barrels off the global oil markets, and that could cause oil prices to rise. Once again, oil infrastructure is still intact, exports are still happening, and that's a good thing. But going forward, you're going to need a lot of investment, not only just in the oil field, but in the oil infrastructure as well, for Venezuela to increase its oil production back to the 2 or 3 million barrels a day that it used to produce, years ago.
And with the instability right now going on in Venezuela, what impact do we expect to see that have on energy stocks?
Yeah, well, I think the winners will be who can get into Venezuela and capture that massive amount of heavy oil, the oil resources that you're talking about. And so you've seen the stocks of Chevron and Exxon go up. But you've also seen the stocks of oil field service providers, and that's probably been where you've seen the most direct benefit, because oil field service providers are the actual companies that go in and do the work to get the oil field pumping more oil. So companies like Halliburton, Schlumberger, those stocks have done well. And then lastly, the refineries, Valero, Phillips 66, Marathon Petroleum, MPC have done well as well. Reason they've done well, Meredith, is this: the oil coming from Venezuela is in direct competition with the oil currently coming from Canada. It's called heavy oil. It's the best oil the lowest cost oil that's used to refine into gasoline, diesel, and jet fuel, and so on and so forth. So the refiners are actually going to be able to have expanded margins for a longer period of time, because now they have another supply source, not only Canada, but now they'll have Venezuela in the future. So that'll keep their margins fairly wide, and they'll be able to earn some sizable profits for an extended period of time as a result of increased Venezuelan oil production in the future.
Absolutely. You mentioned Chevron. Let's go a little bit more into that. How does Chevron stand to benefit right now?
So Chevron is presently the only U.S. oil and gas producer operating in Venezuela. Many of you probably remember back in 2007, the then president of Venezuela, Hugo Chavez, nationalized basically all the investments, all the the oil and gas investments in Venezuela. So what he forced Chevron and Exxon to do at that point in time is take their investments in oil and gas in the country of Venezuela, put it into a joint venture that was owned 60% by the government. Now, Exxon chose not to participate. They left the country. Chevron did participate. They remained operating oil and gas assets in the country of Venezuela, and they still do today. So Chevron probably has the best chance, at least for now, to continue to invest the capital. The engineers are in the country. They have the physical infrastructure. They have the people, and so that's really an advantage. They have a little bit of a head start when the world looks for Venezuela to increase its oil production.
Yeah. And then on the other hand, Exxon execs recently said that Venezuela is uninvestable. So, talk to me about like the realities versus the aspirations of moving forward here.
Yeah, and that's good. That's a very good point, Meredith, and that's why it comes back to this political stability and political clarity. So Exxon and Chevron and any U.S. oil and gas producer or any international oil and gas producer is going to need obviously some political stability. Who's going to run the government, and some clarity on how contracts are going to be written and how the contracts are going to be enforced. These are really just seems what seem like elementary level uh, documents to be put in place, but they're really important, obviously, when you're going to go and invest billions of dollars. So probably what will happen is, like with a lot of these large projects that require a significant amount of money, Exxon and Chevron. Potentially jointly, along with several other countries, maybe, every several countries or companies, or maybe other countries as well, may lay off some of that risk and do a joint venture, and multiple companies and countries may fund some of the capital going forward. But we'll watch how that all play out. I'm getting a little ahead of things. First and foremost, we got to get the political stability and the political clarity before we'll start to see any commitments from an investment perspective.
You started to touch on this before, Rob. Oil, machinery, and supplies. What will the impact on these companies and stocks be, especially, again, while we're in this unstable situation in Venezuela?
Well, I think if you look out in the future, you're going to need oil field services companies. They're going to play a very important role. I mean, Halliburton and Schlumberger have been, international oil and gas drillers, and providing international oil field services for decades. Both of those will play a really critical role in returning Venezuela at some point in time back to its heyday of producing, this from this 1 million barrels a day to potentially three.
Yeah. And the refiners, what will be the implications for Valero going
Yeah.
forward?
Yeah, so for Valero and the refiners, as you highlight, the opportunity for Valero and the other refiners to have a sustained period and an extended period of healthy margins, right? Refining margins is what's really the opportunity here. And because this Venezuela oil is just the same, similar, almost the same type of oil as what comes from Canada, now we've got a massive amount of heavy oil coming from Canada, and there's a lot of resource there. We'll have a massive amount of oil potentially coming from Venezuela. So what that's going to do is that's going to lower the input costs for these refiners for what the main raw material that they need, which is heavy crude oil, to convert into gasoline and diesel. So if you have a much lower input cost and the same price for the gasoline and diesel, that's probably going to be fairly steady. Well, then what does that mean? Well, that means significant margin and probably sustained margins for a long period of time. So that's why we like the refining sector, because of that long-term sustained margins that they'll be able to capture because of potentially more Venezuela oil coming to the U.S.
And in the near term, President Trump can allow more Venezuelan oil to go to Gulf refiners that are set up for that country's sour crude as well.
That's exactly right. That's exactly, and we've got storage capacity. And remember, we drained the Strategic Petroleum Reserve a bit, so there's plenty of capacity to bring more Venezuelan oil and put it on the Gulf Coast for the Gulf Coast refiners to use that can process it into gasoline, but it can also be stored in the massive U.S. Storage infrastructure that's on the Gulf Coast as well.
In general, Rob, what do investors need to know during these major geopolitical events to have the most success?
No, that's a good question. So I think a couple things investors should think about. First of all, oil had a rough year last year, right? It was down 20%. The geopolitical risk premium in oil basically evaporated last year. And as you highlight, Meredith, their geopolitical risk, I think everybody would agree, is probably on the rise. So oil might be an interesting place to look for investors. But energy in general is just so important. Energy infrastructure is so important. And I think that's what I think investors should really come away from this. The fact that the U.S. is pretty much self-sufficient. We produce all of the oil and gas that we need to consume, and we actually produce more natural gas that we export globally to other countries around the world. The energy sector might, and from my opinion, granted, I'm a little biased because this is all we do at Tortoise, but it doesn't get enough appreciation. So I think investors should take a second look at energy, take a second look at the energy infrastructure sector, and then more importantly, or just as importantly, we think that with these AI data centers and this massive build out of AI data centers and AI being the future economy, we think that electricity is the new oil. And there'll be opportunities for electrification infrastructure and investing in electrification infrastructure that probably aren't any in investor portfolios today. Heavily weighted to mega cap tech, but you know what the mega cap tech needs? It needs electrification infrastructure for all of that mega cap tech to work. And so that's what we think investors should take away, not only from just this Venezuela, but the energy sector in general.
All right, Rob. Well, we'll be watching. Thanks so much for joining me. This is Industry Insights. I'm Meredith Heyman. Stay right here on IBD for more. We'll see you next time.